This is Nightly Business Report with Tyler Matheson and Sue Herrera.
One more time, the major averages once again climb to all-time highs as the S&P 500 sees the most record closes in a single month in more than 20 years.
America is open for business, and we are competitive once again.
In a high-stakes speech, President Trump tells heads of state and global business leaders that there's never been a better time to invest in the U.S.
And gaga over growth as the global economy picks up steam. Our market monitor has some great investment ideas for you. Those stories and more tonight on Nightly Business Report for Friday, January 26th.
Good evening, everyone, and welcome. What a way to end the week. It was a melt up into the closing bell, which drove stocks to all-time highs. The S&P 500 had its best day since March, lifted by continued optimism that economic growth around the world is on an upswing and a new batch of strong earnings. Of the S&P 500 companies that have reported profits so far, 80% have topped expectations. Today, shares of Intel helped lead the way with a double-digit gain following its strong quarter that we told you about last night. So here are the closing numbers. The Dow Jones Industrial Average rose 223 points to finish at 26,616. The Nasdaq climbed 94 and the S&P 500 added 33. For the week, all of the indexes saw gains of more than 2%.
Well, the rising stock market was not lost on President Trump when he addressed attendees at the World Economic Forum in Davos, Switzerland. He talked about the economy and growth and, in a widely anticipated and high-stakes speech, told investors and CEOs across the globe that America is open for business. Michelle Caruso Cabrera is in Davos tonight.
President Trump is on a full court press to convince executives from around the world to invest in the United States. In an interview with CNBC here in Davos, Trump reiterated how pleased he is about the corporate tax cut, what it does for American competitiveness, and he's so happy that it's leading to bonuses for workers as a result.
I think that the tax plan has been even better than we thought. What did happen that nobody considered is that AT&T started, but they immediately followed. Hundreds of companies are giving thousands and thousands of dollars to their workers.
He repeated that message again today to a crowd of more than 1,000 people. There have been two types of Trump speeches, the State of the Union speech, the softer Trump. Thank you. And then there's on the floor of the UN, the rocket man, combative Trump. This speech today was definitely the former. He catered to the crowd and softened his America First message.
America first does not mean America alone. When the United States grows, so does the world. American prosperity has created countless jobs all around the globe, and the drive for excellence, creativity, and innovation in the U.S. has led to important discoveries that help people everywhere live more prosperous and far healthier lives.
No one walked out, as some had threatened. If anyone boycotted, you couldn't tell because every seat was full. And despite all the complaints that we heard from many of the people here about Donald Trump, the second he took the stage, the cameras went up. One journalist noted on Twitter that all the, quote, global elites were behaving like they were at a Britney Spears concert. For Nightly Business Report, I'm Michelle Caruso Cabrera, Davos, Switzerland.
Investors today may have been a little disappointed when they saw that the first reading of real gross domestic product for the fourth quarter wasn't quite as strong as hoped. The report showed that the economy slowed at the end of last year, but a closer look also reveals something else. Steve Leisman explains.
U.S. economic growth in the fourth quarter registered a bit below economists' expectations, but the details of the report were stronger than the headline. Gross domestic product rose 2.6% at an annual rate for the 3 months ending 2017, down from 3.2% in the prior quarter. But it was the third quarter in a row of above-trend growth, and that could mean more jobs, but also higher interest rates ahead.
The jobless rate is most likely to continue to move downward because growth is moving above potential. For the bond market, this means the Federal Reserve will have to continue to raise interest rates, just as it did 3 times in 2017. It's highly likely to raise interest rates 3 times in 2018.
The GDP report showed strength in consumer and business spending, with higher oil prices propelling investment in the energy sector. Higher stock prices seem to motivate consumers to spend more of their income than they had been in the past. Taking away from growth was a sharp decline in inventories and a surge of imports. They're unlikely to continue to drag as heavily on the economy this year. While President Trump didn't get the 3% figure he's made so important, his Treasury Secretary suggested it may be too soon to look for it. That's because the effects of tax cuts and the higher deficit spending from the tax cut bill have yet to hit the economy.
I think we're going to see short-term aberrations in any quarter. I think we're very comfortable with what I've been saying is our objective is sustained 3% GDP over the long term. So we're not concerned about any one quarter which can be revised up or down. Relative to where everybody else was talking the beginning of the year at 2.1 and 2.2, I think people now expect we're getting to 3% GDP.
3% is a number that matters only politically. Economically, the important question is if the U.S. is growing at or above the economy's 2% potential. That was the case in this report and for much of last year. It's not a bad bet that above-trend growth looks set to continue this year as well. For Nightly Business Report, I'm Steve Leisman.
Meantime, orders for long-lasting durable goods increased in December by the most in 6 months. Bookings for goods designed to last at least 3 years increased nearly 3%, and that was a lot more than economists expected. Overall, orders for durable goods have risen in 4 of the last 5 months, a positive sign for the industrial part of the economy.
Lawmakers are now turning their attention to immigration. While politicians go back and forth over the details, the business community is paying very close attention, simply because of the impact that immigration has on the economy. Ilan Mui has more.
Washington's battle over immigration also has big implications for the economy. The White House is proposing a path to citizenship for 1.8 million undocumented immigrants who were brought here as children. And that could immediately boost economic growth by $23 billion a year, according to one estimate. Legal immigrants also make up a growing share of the U.S. labor force. In 1980, just about 7% of workers in America were foreign-born. A generation later, that number is nearly 17%.
Immigration is not a panacea that's going to cure all of our economic ills, but having young people who are hardworking, who are driven in the economy is only good for America and for our American workers.
That's why major corporations are getting behind a deal that would allow some immigrants with protected status to stay in the U.S. permanently. In exchange, the White House is requesting $25 billion for a border wall, limits on sponsoring family members for citizenship, and an end to the visa lottery. Some worry those measures will wind up reducing immigration in the long run and harming economic growth. President Trump has pledged that economic growth will hit 3% or more while he is in office, and solving the immigration puzzle could help him make good on that promise. For Nightly Business Report, I'm Ilan Mui in Washington.
So, in terms of trade, what policies would be in the best interest of the United States? Here to discuss that and also offer insight into what the latest GDP figure means for the economy is Beth Ann Bovino. She's S&P Global's chief U.S. economist. Let's start, why don't we, Beth Ann, with the subject of the GDP growth numbers, which came in a little less than some had expected, but better than we began 2017. We ended on a higher note there. What do you look at? Is there anything we should be worried about in that number? Does it signal anything?
Well, a couple of points. First, it was in line with what we had expected. We were looking at 2.7, so we were close to that reading. And one of the reasons why we thought that was because the trade numbers were coming in so lousy, and that was we thought was going to be a drag. Inventories and trade now, and they both were a drag. But inventories are interesting, partly because businesses basically have emptied their shelves because the holiday season was so strong. Saw that in the consumer spending, and now they have empty shelves. They're going to have to fill them up again. So that actually we see as a positive. The other thing that people might not have noticed is that the domestic final spending reading incredibly strong. I think it was over 4%. And that means that the domestic side of the equation is looking very robust. All good news.
Let me turn you to trade, because the president signaled that he may not be completely done with TPP. What does that mean to you, and what does it portend perhaps for the NAFTA negotiations?
Yeah, that's we think this kind of softer tone that the administration is taking is actually a positive sign. We'll see if it lasts. I mean, things certainly do go up and down these days, but we do see that as a positive side. We think that might actually give NAFTA, which is in negotiations, I think it's their 6th round, a little bit more chance of our baseline is that NAFTA will stay in place, although with some changes, and we think this actually gives it a little bit more of a push to hold that. Another thing to take into account, President Trump mentioned some interest in going back to TPP. There, given that the administration had just put some tariffs on, I guess, washing machines and solar panels, affecting China and particularly China, but other Asian economies as well. Getting involved with TPP might be good to have a few more allies in the region, and so that could be a positive there as well.
So your baseline scenario is that we will stay in NAFTA. What if we don't? Is that going to be good for the U.S. economy and workers or not?
We have written about that in the past, and we do see the baseline that we do stay in NAFTA. But again, it's it's up and down here. We see that if indeed the U.S. does pull out of NAFTA, all 3 countries will be hit: Canada, Mexico, and the U.S. U.S. the least. But what we can expect to see is that yes, maybe some factories will come back to the United States, but that lost competitive edge that we think that the U.S. gained from these basically the supply chains that helped make things much more smoothly operating. Could hurt our business, our competitiveness, and that would actually mean less business and probably fewer jobs.
All right, Beth Ann, thank you very much for clearly explaining that. Beth Ann Bovino with S&P Global.
And it's time to take a look at some of today's upgrades and downgrades. Starbucks was removed from Goldman Sachs' conviction buy list. The firm is maintaining its buy rating on the stock, but also cutting its price target to $68 from $73. Goldman cites dairy and coffee inflation as key risks. Starbucks shares closed at $57.99, down more than 4%. Bed Bath & Beyond was downgraded to underweight from neutral over at JP Morgan. The firm cites concerns over growth. It's also worried about margin erosion as management doubles down on its price match guarantee. The price target was cut to $18 from $21, and the shares closed at $22.53, down 2%.
Heading the other way, Whirlpool upgraded to outperform from market perform at Raymond James. The firm notes the prospects for price hikes and improved washer margins. The price target on the stock now, $200 a share. Shares agitated closer to that mark, closing at $185.97. That's up 1.5% on the session today. KB Home was upgraded to neutral from underperform at Buckingham Research Group. The firm cites the recent decline in the stock and says KB is on track to meet or exceed its 2019 goals. It maintains a $34 price target, but shares closed below that level, down nearly 2% at $33.16.
Still ahead, why Wynn Resorts lost billions in market value in today's trading in just a matter of hours. A surprise ruling against Boeing. The International Trade Commission voted in favor of Canada's Bombardier in an ongoing trade dispute. The commission ruled that Boeing was not harmed by Bombardier and its all-new C-Series jet. Boeing claimed that Bombardier unfairly benefited from government bailout subsidies and that those subsidies allowed Bombardier to sell its new jet to Delta at absurdly low prices, quote. The vote effectively shelves 2 tariffs totaling nearly 300% that the Commerce Department wanted to impose on Bombardier.
New York, New Jersey, and Connecticut are triple teaming up to sue the federal government. The states challenging the recently passed tax law and its caps on state and local tax deductibility. The governors say the law unfairly targets their states. New York's governor contends the federal law is illegal and that it violates states' rights.
Earlier this week, we told you that the CEO of SunPower was concerned about the impact solar tariffs would have on his business. Today, SunPower said it was putting a $20 million U.S. factory expansion on hold unless its panels receive an exclusion. SunPower is based in California, but as we reported, it does most of its manufacturing outside of the United States. The tariffs take effect on February 7th.
Well, earlier in the program, we told you how the rise in durable goods orders is a positive sign for the industrial sector of the economy. Honeywell's quarterly results are no different. They confirm that. The industrial company raised its earnings outlook for the year and reported better than expected profits. That helped send the stock to a new high. Morgan Brennan now with more on what's working at Honeywell and in the sector overall.
After a flurry of earnings this week, the industrial sector's message? Growth. Take Honeywell, which beat estimates and raised guidance. The maker of jet engines and thermostats is welcoming demand across its segments. And despite a nearly $4 billion tax-related charge last quarter, it's betting reform will boost business even further.
I think it's going to be good for U.S. business. For us, we certainly see a much greater level of bullishness on the part of our customers, which should translate to continued investment. And you're right, their CapEx is our revenue, and we do expect some level of investment to accelerate.
Honeywell is increasing its 401k match for employees, and it plans to bring most of its overseas cash back home. It isn't alone. Caterpillar, 3M, and United Technologies all posted strong results this week, raising guidance and unveiling capital spending plans. Some companies are pre-funding pensions, and others are on the prowl for mergers. Experts say the growth is across the board, as even hard-hit industries like business jets begin to take flight.
It's been a great quarter so far, and I think what's most exciting is the outlook for 2018 is exceptional. I mean, the Tax Act is real. People are spending money in the industrial world, and I think it's going to be a great year.
But there are exceptions, General Electric perhaps being the biggest. The Dow's oldest component missed expectations this week and disclosed 2 SEC investigations, sending that stock to multi-year lows. Overall, though, the sector's seen some big moves, be it 3M or Deere or Caterpillar or Boeing. Analysts say stocks are getting pricey, but profits are starting to catch up.
We like the value-ish names, right? The stocks that haven't gone up much at all, things like GE, for example. But we also like Emerson, we like ITT, we like Rexnord. There's some great, Honeywell is an interesting story here.
But earnings season isn't over yet, and more will be revealed next week when Boeing, Lockheed Martin, Siemens, and others also add to the sector's story. For Nightly Business Report, I'm Morgan Brennan.
Investors in Wynn Resorts take money off the table on a report alleging sexual misconduct by founder Steve Wynn. That is where we begin tonight's Market Focus. The Wall Street Journal reported current and former employees of the Wynn Resorts came forward to say that they had been sexually harassed over a number of years by Wynn. The report added Steve Wynn paid more than $7 million to settle claims he had engaged in sexual misconduct with a former manicurist. Steve Wynn denied those claims. Shares finished the day down, though, 10% to 180.29. AbbVie said a more favorable tax rate and robust sales of its best-selling arthritis treatment, Humira, prompted the pharmaceutical company to raise its profit estimates for 2018. The new guidance came after AbbVie reported earnings and sales that rose more than expected. AbbVie shares jumped 13% to 123.21. And Colgate-Palmolive said weaker pricing and an increase in packaging costs pressured margins in the latest quarter. The company reported a drop in profit and revenue as sales slowed in North America. Colgate also warned that growth would be challenged for the rest of the year due to global uncertainty. The shares were off nearly 5% to 73.56.
AstraZeneca said its experimental inhaler treatment for chronic obstructive pulmonary disease, known as COPD, showed significant improvement in patients and hit the majority of its trial goals. The company said it may apply for approval of the medication in the U.S. and Europe next year, but for now, it hopes to have the medication green-lighted in Japan and China. Shares up 1% to $36.63. The hedge fund Pershing Square Capital, run by billionaire investor Bill Ackman, has reportedly taken a stake in Nike. It bets the sports apparel maker will continue to be a dominant player in its space. While the size of the stake is unknown, reports say Ackman plans to take a back seat on this investment and won't push for changes at the Oregon company. Nike shares up a fraction at $68.04. And FedEx says it will spend more than $3 billion on wage hikes, employee bonuses, and capital investment, all because of the new tax law. As part of the move, FedEx will contribute $1.5 billion to help fund its pension plan. Shares rose marginally to $268.85.
It is time now for this week's Market Monitor. He says as the global economy improves, now is the time to invest in foreign companies whose stocks are likely to outperform. It is his first time on the program, so let's welcome John Merrill, founder and chief investment officer of Tanglewood Total Wealth Management. Welcome. Nice to have you here.
Great to be here, Sue.
Let's start, first of all, with your first pick, which is the Vanguard Total World Stock Index, less the U.S., meaning minus the U.S. It's an ETF. You say this is really a great place to start, and I guess Total World says it all.
Exactly. If you want to make sure you participate in the global stock rally, which has been in effect now for at least 18 months, this is a great place to start because it covers every stock that is not a U.S. stock. So as a building block, as a base, for your international investing, I think it's a great place to start.
Second one is Vanguard Emerging Market Index. Here again, you basically take the idea that it's better to be invested in the whole shorefront of stocks rather than try to pick the individual winners. Why do you favor this approach? Because some people think that this is the area, emerging markets, where a smart stock picker can outperform the index.
Tyler, I really don't disagree with that. I think that in the emerging market space that you can. But for most people who don't have the tools of a wealth manager like ourselves, it's a lot easier to make sure that you cover it and not make some missteps in this area by covering a broad market index. And the Vanguard Index is a great index. We own it, but we also own active funds in that area because I definitely agree with you.
From the broader approach with the first two ETF picks, now we're kind of narrowing it down to technology with the iShares technology sector. And basically you say that it's changing, technology is changing every aspect of our life. Why do you like this particular tech sector, Spider?
Well, because it covers it, from a market cap standpoint, covers the whole technology sector. And I think technology really marries well with your international investing, the thesis of a global stock market rally, mainly because most of the tech giants are centered in the United States. In fact, the broad Vanguard Index, the VEU, only has 6.3% technology. So if you want to own the companies that are really changing the world and changing every aspect of it and leading the changes in almost every sector, this is the place you have to do it.
John, thank you so much for joining us. We're jealous that you're out in beautiful San Diego, but somebody has to do it. Someone has to do it.
That's right.
John Merrill with Tanglewood Total Wealth Management. Thank you so much.
All right, coming up, what three of the finalists for Amazon's second headquarters all have in common. Dell Technologies reportedly considering going public. The move could help the company raise cash and reduce its debt load. 4 years ago, Michael Dell took his namesake PC company private in one of the biggest leverage buyouts the tech industry had ever seen. The company also reportedly considering a deal with its majority-owned VMware.
The city of Tacoma, Washington saw the biggest rent increase last year. According to Trulia, rents rose nearly 3 times the national average to about $1,800 a month. Tacoma is only 30 miles from Seattle, where companies like Amazon and Microsoft and the influx of workers have helped drive rents higher.
Well, 3 of the 20 finalists now for Amazon's massive new headquarters project are in or near the nation's capital, and that has prompted a lot of speculation that CEO Jeff Bezos, who already owns the Washington Post plus a home in town, has already made up his mind. But for all of the region's pros, there is no shortage of cons, and Scott Cohn is in Montgomery County, Maryland tonight.
Montgomery County, including communities like Rockville and Bethesda, is rich and vibrant, joining Northern Virginia and the District of Columbia, 3 Amazon finalists within about a 40-mile radius of the nation's capital. In a field of just 20 contenders, they have to like those odds. But Maryland's governor is taking no chances, asking the legislature this week for $5 billion in incentives, because just locating near Maryland isn't enough.
It'll have more of an impact on our state if we're located here. And I believe we have a better story to tell.
Maryland's workforce is one of the best educated in the nation, with the largest concentration of tech and science workers. Montgomery County is one of the most affluent in the nation.
Maryland officials won't say what sites they're offering, but one possible location, the former White Flint Mall, a regional shopping center torn down a couple of years ago, replacing a one-time brick and mortar retail mecca with the retailer of the future.
Not to be outdone, Virginia's new governor, Ralph Northam, is pointing to one of the best business climates in the nation and a world-class labor pool in its own right. And the District of Columbia itself has a higher percentage of college graduates than any state. D.C.'s mayor is angling for the Amazon prize.
We know that we have the talent pool, the livable and walkable communities, the great arts and culture scene that the employees say they want, and Amazon says it wants.
But all the contenders have problems, chief among them infrastructure. Roads are congested and crumbling. Traffic in parts of the region among the worst in the country. And crime and other quality of life issues could make it harder to attract new talent to an expensive place to live. Then again, Amazon CEO Jeff Bezos has a home here, and he owns the Washington Post. The hope here is that he might not mind dividing his time between Washington State and Washington, D.C. For Nightly Business Report, I'm Scott Cohn in Montgomery County, Maryland.
Can't wait to see. Before we go, here's another look at the record day on Wall Street. The Dow rose 223 points. The Nasdaq climbed 94. S&P 500 added 33. The gains for the week overall for all three, better than 2%.
Wow.
Pretty darn solid.
What
right?
a month it's been.
What
It's not even over.
I know. That does it for us tonight. I'm Sue Herrera. Thanks for joining us.
I'm Tyler Mathisen. Thanks from me as well. We'll see you on Monday.